So congratulations on the performance around Pimco, on the inflows that you're seeing there. Would you say that there is perhaps upside risk to your forecast that you've been telling the market, you've been confirming to the market today because of that strength in Pimco?
Good morning, Anna. Thank you very much for the question. Yes, with 2.9 billion operating profit in the first quarter, we are 200 million ahead of our pro rata outlook for the year. But insurance is always a volatile business, therefore it's too early to adjust our outlook. It is true, Pimco is really on a great turn for recovery. We had already a great last quarter in Q4, and now Q1 continues, and I think Q2 will also continue the success story of Pimco.
How sustainable do you see that success at Pimco? Clients flocking to your Pimco income fund, it seems. How sustainable are the inflows? What do you see in the crystal ball?
Crystal ball is that Pimco is really doing nicely and is well recovering. But I think we should also understand that we are in a very volatile world, and I think we enjoy the quarters as they come, and we hope that we can surprise more often in the coming quarters.
OK, we'll take the surprises as they come then, Dieter. Tell me a little bit about your appetite for M&A. You spoke to my colleague Manus a little bit earlier on this year. You said that it's not on the immediate list, but that opportunities would be evaluated. Given the strength of the performance right now, do you have more appetite to do M&A? And if so, would that come in the United States?
Look, with 2.9 billion operating profit and just this change in this famous Ogden discount rate in the UK spoiled our party to reach for the first time the 3 billion mark in operating profit in a quarter. You see that we have a lot of organic potential in the company to produce profit. If there comes an opportunity, we take it, but that is really opportunistically. We are executing straight on our 3 billion share buyback. We have a very strong capital position, so we can really move in all directions, and we can here sit and wait and look for good opportunities.
You announced a big share buyback, and you, I know, have talked in the past about, having the infrastructure in place to do more if you decide to. Is there any interest in doing further share buybacks in the future? We don't expect them every quarter, but any insight?
Well, let us first execute the 3 billion. At end of March, we had executed roughly or close to 1 billion. We are, since our shareholder meeting, we continue to execute because we had to stop from a legal point of view before the shareholder meeting. So let's first finish the 3 billion and then we talk about next steps.
You mentioned the Ogden rate. Are we through the worst of the impact there? Give us an update on how that's impacting your company. You seem, a little disappointed in the impact it had on the top line.
It's not a top-line impact. It is a reserve strengthening for last year, which cost us roughly a percentage point in our combined ratio. That is truly a one-off. I think the UK market has certainly a good recovery in motor rates, also driven by Ogden. But when you translate Ogden rate of minus 75 base points in a macro outlook for the UK economy, I think that is a very grim outlook for the UK economy. And therefore, I was really surprised that somebody would have a long-term so negative view on its own country.
Yes, it's interesting to unpick what that tells us, Dieter. What is your view of your exposure in the UK, your investments, your business in the UK as these Brexit negotiations continue? What's your attitude to UK investment?
We continue to run our local business. We are not Brexit dependent because it is local legal entities. It's Pimco, Allianz Global Investors, and in particular our insurance businesses, which have their own carrier. we can still, I think, do and service our customers unchanged. And of course, we are dependent also in the growth outlook how the UK economy is developing.
And in terms of the broader European story, of course, politics has been very much at the centre of things in the first 5 months or so of this year. Are there still political risks on the horizon that you see, Dieter, in terms of the Eurozone?
I think with post-election in France, we see ourselves very well positioned. France is next to Germany, our second largest country in Europe. We are well positioned there in the life and in the property casualty business. We have also a high exposure to French investments, much bigger than our UK investments. And I think when you look at the outlook for continental Europe, I think we are very well positioned to benefit.
Very well positioned. And we just got confirmation of the 0.6% growth rate for Germany in the past quarter. Dieter, the German finance minister is clearly expecting the ECB to change course and to tighten monetary policy soon. Is that your expectation? And would you suggest that would be a good idea?
We are investing many hundreds of billions euros for our customers, and when we can invest it at higher rates, we would be really delighted for our customers and also for our shareholders.
Do you have an expectation that the ECB will change course soon?
I think I would not jump too early on this train. ECB will take very measured and very careful steps, and certainly waiting, let the Fed go first, and then maybe we see something. But I would not build a strategy on an early rise in interest rates of the ECB.